Good morning, good afternoon, good evening, traders from across the globe. One of my short-term trading live with Oscar. Traders, this is the weekend webinar. This is the weekend of Sunday, 11/23/08. And if you've been watching these markets, wow, have they been insane. But we do expect that insane volatility. And traders, the beginning of last week, we called for a target of 723 in the S&P. You know what happened? We broke all the way down through the 800s, into the 700s, got all the way down to 739. That call we made when we were way up in the 800s, traders, 739 from a 723 call. I know, I'm the worst. I know, I didn't get it right. But you know what? That's pretty close. That is really close in my opinion. And you know what? A lot of traders did really well last week, but there are a handful of you that deserve a little bit of a chastising here, traders, and we're going to talk about this right here, right now. Last week, or starting about 2 weeks ago, we had a bond strategy. That strategy was to sell our bonds at certain levels and then have our protective stop in case the trade goes south. Now, many of us, well, actually only a handful of us took the trade, but we sold bonds, and put a stop in. Well, just happened on the day that stop was supposed to get hit. I was at a trade show and I wasn't minding the fort, you know, when the cat's away, the mice will play. Well, a lot of my traders canceled their buy stop, their protective buy stop in bonds somewhere between 122 and 123 or even above 123, wherever that stop was supposed to be for you. You guys in my premium room, you know where that stop was supposed to be. Well, for the guys who canceled it, they rode the whole damn thing up to 129, some of them. I mean, come on, guys. A stop is your best friend. How many lessons, how many times have I told you about this? Now, because we don't get this sort of movement, people sort of fall into a lull and they forget, they get into a feeling of security or safety, and they forget what can happen and the power behind commodities markets. Well, if your stop, if you canceled your order, if you were a CIC guy, cancel it close, you got tagged really bad last week, traders. Bonds made a move that I have never seen in all 27 years I've been following in this industry. I've never seen bonds make a move like that, and neither has anybody else. Read the newspapers. Bonds have never moved 8 handles in 2 days. That's 8 full bond points in 2 days, traders. No one's ever seen that. I've never seen it. That is what can happen to you if you do not hold your stop in place. If you cancel it, if it gets close, if you fail to place it at all, suddenly a stop goes from your best friend to your worst enemy, and a stop is your best friend. Now, traders, understand this. Had you allowed that bond stop to get hit, you took a loss in bonds. We made way more than that in S&P calls this week. You would have had a week that was, ooh, we got tagged in bonds, but we made it back in S&P plus. You should have had a good week. A lot of you did have a good week, but the guys who canceled their stops got this. And you know what? You will get that every time you cancel a stop. Traders, you are playing in the brass ring. This is the big boys game. You don't put a stop in it and you become chicken when it gets close. You take your hit and on to the next trade. The way you take winners is the way you should accept your losers. Readily, just like that, the way they come. It is an integral part of trading. I don't want to keep chastising you about this, but you know what, traders? I felt really bad for you guys who pulled your stops. Guys, traders, women, whoever pulled their stops. Yes, I felt bad, but at the same time, I felt like your dad. I wanted to slap you for doing something wrong. Hey, martial punishment's allowed in this state. You can hit the kids, by the way. In any event, if you were in my office, I would have slapped each and every one of you for letting yourselves get hurt like that. So please don't ever do that again. And if you hang with me, we'll make it back. There's other markets. There's plenty of setups. Just remember this lesson, all right? Enough of that. Traders always play stops. All right, now, the S&P, traders, wow, is it swinging. However, we are approaching next week, well, this week I should say, we are approaching the next big 3-day holiday weekend. It actually is a 4-day holiday weekend for many markets. That is Thanksgiving holiday here in the United States. Now, I will say this, I've had literally hundreds and hundreds of new members sign up in these last 2 weeks. I can totally understand why you're signing up, traders. there are a few places left out there that are nailing this market right and that understand which way it's going and can teach you how to figure it out for yourselves. And that is right here at Short Term Trading Live with Oscar. So thank you guys for your support. Thank you, OmniX, for showing up. But the point behind this is this: for you new traders that don't know me or my style as well as some of the old OmniX, I do not trade any 3-day holiday weeks or any 3-day major holidays. I don't trade the days leading up to that holiday ever. And then a lot of times I won't trade at least the first half day when we get back. So we are closed. It's a half day on Wednesday for many markets. Thursday we're closed completely. Friday most markets are closed. I probably won't trade again until mid-Monday, if at all on Monday. So tomorrow, being this Monday, could be the last trade that we do for the week. If there's a great setup, maybe we'll look at a portion of Tuesday to trade. But count on possibly trading Monday, and past that, we'll play it by ear. But most likely, no trading will happen till after the 3-day holiday weekend. Now, why? Traders, I will tell you, in all my years of trading, I have seen this happen every single major holiday. If currencies were bearish, they suddenly spend a few days bullish. If S&P was going down, it starts going up. The dollar starts going down when it should have went up. Gold goes nuts for no reason. All the things that you wouldn't expect to happen because they're not the normal trend of the markets that you trade seem to reverse leading into a 3-day holiday weekend, and Thanksgiving's a big one here. So I would think, for no reason at all, currencies like euro currency, British pound, maybe Australian, they're going to rally. Dollar's going to get hit because it's wrong and it shouldn't be going that way. As you know, currencies are in a downtrend right now and should be working their way down. There's a very good likelihood that between now and Wednesday, currencies will go up, dollar will go down. S&P might have a rally when it should be going down. Markets tend to go crazy, but almost always in the opposite direction of their natural trend. Which means if you stay out of it this week, it gives us great trade opportunity next week. Do what I do, traders. Avoid these next couple of days. Monday's an open day. Monday's a fair game day. Past Monday, anything you do is really gambling because these markets don't adhere to analysis well. They don't adhere to the normal thinking. And there are so many less traders out there trading that they are susceptible to a big move in a direction nobody would expect. So I give this warning for every holiday. Traders, we have 385 videos on YouTube for you to go look at. And you will see at each one of the 3-day major holidays in the United States, I always give this same speech. If you'd like to go see some of our trading videos, and there's a lot of great analysis in there, simply go to www.youtube.com/futuresanalysts and go take a look at some of those videos. There are many and quite helpful. All right, traders, next is the S&P, and I do have a chart. I want to show you a chart. I will show you where we are at in the S&P now, what could likely happen for tomorrow, what you need to be careful of and look for trade opportunity. And then, like I said, past that, I don't think we'll do anything. But let's go look at this chart for now, traders. Let me show you what's going on out there. Okay, traders, what you are looking at now is the S&P December daily bar chart, the ES or S&P daily bar. Traders, as I have shown you over the last 3-4 videos easily, we have this upright head and shoulders in place, which gave us a projection down to about 723. We got all the way down to 739, which is really close to that projection. More important than that, I want you to watch what's going on here. You see these blue lines? They represent a parallel channel. Traders, top of the channel gets hit, bottom of the channel gets hit. Top of the channel gets hit, bottom of the channel gets hit. Top of the channel gets hit, bottom of the channel gets hit. We are right here, right now, top of the channel. You know where that comes in? Between 823 and 826. So let's call it 824 and a half, 825 right there. That's where the next spot that we should hit in the S&P, if they can even muster that kind of a rally. We're trading about 800 right now, so there is a chance they could get it there. That will likely be your sell spot. If this were not a 3-day holiday weekend, or if this wasn't a major holiday weekend in the U.S., I would say you're going to hit that spot and then have another collapse. The fact that this is a holiday week coming up, anything could happen. You can blast right through this and go all the way up here and test the middle of the head and shoulders and still end up coming back down for a mean break. I don't think that will happen, but that is a possibility because of the holiday week that we are about to be trading in. And at that speech I just gave you, traders, you will find this out for yourselves. If you end up sticking around for 27 years, you should not trade those weeks because you could easily end up here, which, of course, I'm expecting the outside possibility of that. But basically what I'm really expecting is just more and more downside because that's what the market calls for. Now, indicators are still pointing lower, but the unexpected could come your way. Now, if you're looking at this chart, there's something even larger happening here. If you connect the three bottoms that we made, that triple bottom, which really was a quadruple bottom after it was done messing around, and then you connect the top of the parallel channel to it, you actually see that we are in some sort of a wedge and have broken out of that wedge. Now the market went down lower, hit the bottom of the channel, came up and stopped cold at this wedge trading tonight right around the 800, 806 mark. Stopped cold right there. That's been the high so far Sunday evening. So the fact that we're in this wedge, it is going to be considered resistance. We have to get through this spot right now. The market is testing this resistance. If it gets through it, the next spot is 823 to 826. That should turn out to be a sweet spot for trading tomorrow. Again, you know, it is a wild card day, and any day leading up to a holiday weekend is a wild card, but I think it'll be controllable tomorrow. There's nothing but bad news out there. What could possibly sustain this rally? Not much. So if there were a rally to come, and I'm not calling for one, traders, understand that. I am bearish, but if there is a rally to come, do not fall in love with the upside. Remember the analysis I have just shown you right here. It will help you stay in tune with the larger picture. So, you see that chart, traders? Keep that chart in mind, that parallel channel. That is no joke. We have been stuck in that parallel channel for quite some time, and I think we're going to stay in it. The downside is the likely side to have penetrated. But again, remember, this is a holiday week coming, so it can go whoa, and then back down, and then back up and settle unchanged like nothing ever happened. You could get that, so be careful. All right, now, traders, what's going on out there? Some of the things going on are really, really ugly. I will say this, with the bonds moving as far as they did last week and the gold moving 50, 60 bucks, the S&P getting hammered as big as it did, that means that the charts are telling us there's a big, big piece of fundamental news coming out this week. We will hear about something major, whether it's the Citibank collapse or it's something else. Another country needs money because their currency is about to go under. Who knows what the fundamental will be? I mean, traders, it could go from a piece of financial news to a terrorist attack. It could be anything. And I'm not calling for that, please no. But anything can happen. And when you see that sort of massive movement in bonds and then gold go, it is telling you something big is coming out. So I am here to tell you that the charts are telling me there's a big, big piece of fundamental news coming out this week. Keep an ear out for it and be careful if the news gets released. Basically, that is what happens when you see moves like that and can't explain why. So let's see what happens. Traders, interest rates are getting hammered. When bonds go up, interest rates go down. Interest rates now on the 3-month T-bills are relatively at zero. I mean, wow, we've never, ever seen these rates. These are lower rates by the market moving higher in bonds. These rates are lower than we have ever seen them. At least in my time, I've never seen rates this low. So it's getting interesting out there. Another thing, last week alone, over 80,000 layoffs. 80,000 layoffs just last week around this globe, traders. 52,000 of that came from Citibank alone, a U.S.-owned company. Wow. If you think that's a little, if you think that's a lot, that's nothing, traders. Wait until you see the massive layoffs coming. Because what's coming next? The same thing I've been telling you about video after video. We're getting ready to go into the Christmas shopping season. And you know what's going to happen, traders? Nobody's going out there to spend all their money. Half the people don't have any of it left. They're looking at the 401k results and going, oh my goodness, I'm broke. This Christmas, you will see retail sales down lower than we have seen in at least 50 years. What does that mean? More layoffs coming our way. Now, how about the car companies? How many car companies are going to be laying off around this globe and in this country? Every single one of them, including Volkswagen probably. They had their big score, but that's not going to last, traders. All the car companies are laying people off. That means, how about the companies that create the parts for the cars, the rubber companies, the glass companies, the metal companies? They're going to have to lay off people, because if the cars aren't being built and the car companies are laying off, their suppliers are going to be laid off. You get the picture? It just gets worse and worse. I'm watching real estate, commercial real estate, suddenly, as I drive around town, there's almost as many signs in front of the commercial real estate up for lease or rent or in foreclosure than there used to be driving around looking at the residential. And I have been mentioning this to you many times, that the commercial real estate shoe is going to drop, and when it does, it's going to be huge. It is beginning to drop. Now, how about all the layoffs from that? How about all the men that are building these buildings that get sent home? What are they going to go out and purchase? Then you have unemployment, traders. We are seeing the worst unemployment figures we have ever seen, right? With unemployment that high, wait until you see what happens after the Christmas rush and all those people get laid off. Now, when you talk about unemployment, right, you got to understand this. 500,000 people in this country applied for unemployment the last couple of months, right? They're not even counting the ones that have already been unemployed, used up their benefits, and are out on the street. Add them into the figure, add the people who are going to be laid off shortly into the figure, and layoffs across this country and across the world are massive. If there are that many layoffs, there's no one buying, there's no one traveling, there's no one on vacation. And, when I say no one, of course, that's over-exaggerating, but there are many, many less that will be doing that will be traveling, that will be spending, that will be buying private jets, that will be flying first class instead of coach. Those things are going to stop. Buildings, new buildings that are going up, how many of those projects are going to get started? Because banks won't even fund them. Do you get the picture here, traders? There is no way that we have bottomed yet. The bad news is still just beginning to flow. So be careful here, and don't fall in love with the upside. No matter what happens, don't fall in love with the upside. All right, traders, one of the things that we like to do here is to tell all the new traders that show up, please come to our chat rooms. Traders, the whole purpose of www.livewithoscar.com is to teach you how to be a better trader, how to get the mentality behind trading correct, and to be your mentor. The best way I can do that for you is to have you show up in my chat rooms. So make sure you come to www.livewithoscar.com. Jump into the chat rooms. Traders, there is so much free help, and I'm talking F-R-E-E. There is so much free help at our site. I am more than happy to help you traders out. You don't have to spend a dime, traders. You show up at our site, come into the free chat room, and I will be there to start instructing you. Granted, luckily, guys, many of our traders start out free and upgrade themselves into the classrooms where the teachings gets, a little bit more professional, and we really get down to the nitty-gritty, and we teach them things that we don't teach to anyone else out there. But that's, of course, their prerogative. But we do a lot of help, a lot of teaching in those free rooms. So make sure you come on down to our site and join those free rooms. That is the place to be, traders. Either be there or be square, as they say. All right. Don't trade alone, traders, and that's the best thing you can do is show up in those chat rooms if you don't want to be alone. There are literally hundreds of Omniacs that show up in those chat rooms every day, and there I can certainly help you to become a better analyst and trader. All right, traders, the S&P, don't forget, sell those rallies, don't get caught, don't fall in love with the upside. Always place your stops because they are your best friend. And remember, one more reminder about this. There's going to be a slow week as far as trading for me is concerned. It is a holiday weekend, and whoa, baby, there's a holiday weekend coming, and I am not going to mess with it. All right, traders, last but not least, say this to yourselves every morning, every afternoon, every evening. It'll help you keep your emotions out of trading, and you know what that is. Stops are in. Emotions are out. And happy Thanksgiving, everybody out there.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.